Hey guys, it's Astro with another market update. We're going to look at Bitcoin, Ethereum, and today we're going to look at the S&P 500 and the Nasdaq. But we've had a huge week last week with Trump announcing those tariffs on 180 or 185 countries. So there's a lot to digest. The markets, initially actually pumped on the announcement because he came out and he talked about, just the car tariffs, Mexico, and it looked quite positive in the beginning, which probably tricked a lot of people. Even hedge funds were getting long at the beginning of the announcement, but when he brought that board out with all those countries, we seen the sell-off, and I don't think people realized straight away what was going on. And through X, I seen the equation for basically it was making up the deficit between the United States and those countries, and the markets did not like that. And basically ever since they've been selling off, and markets just opened today. Here it's Sunday here in Canada, and they have continued to sell off. So it's not looking great right now. We're going to look at some metrics, and then we're going to hop over into the charts and look at the stock market and the crypto market. So first up, I want to look at crypto, fear and greed. So now we're back to 23. You can see a few weeks ago, last month, we were at 28, marked up to 34, and now we're back down, putting in lows at 23. And if we hop over here and we look at the stock market, we are in extreme fear. We're in a 4, which, it's been a long time since we've seen that kind of fear in the stock market. And you can see, S&P 500 has a huge drop off. So another few metrics that I looked at, we just wanted to look at the search volume on Trump tariffs, and you can see last week, obviously the big news event leading into that, and the event itself, we had a huge spike in volume on that search term, but we have started to pull back. So far this week we're sitting at a 66. Obviously the week is only starting, but if this is dropping off, hopefully people are just coming to terms with what's happening. Another thing I wanted to look at is the recession. So anytime that the search volume ticks up on recession, it tends to lead to some kind of pullback across markets. And you can see we had this little spike up in August 4th, 2024, which was actually when Bitcoin, the Bank of Japan, hiked the rates, and Bitcoin put in that low, around 49k. And then it's been pretty silent until more recently, and then we had that spike in March, and that marked a low, and now we're ticking up to new highs. And you can see United States is up there, and this is a global economy, so I'm searching worldwide, not just in Canada or the United States. So I think it's a concern everywhere. We've got Ireland here, Canada, Singapore, United States, and New Zealand as the top 5. So in my opinion, I think there's a lot of countries that are looking like they're going to go into a recession, but at the minute, with the data we're getting out of the United States, it doesn't appear that way. That's not to say that if these tariffs go ahead, things start to struggle, that they won't go into a recession. But personally, I don't think that's what Trump wants. I don't think he wants a recession at the very beginning of his term. The data that's coming out is showing that the US economy is strong. So, although Trump wants the rates cut, the Fed are in the right position to not cut rates based on the data that's coming out. So it's a tricky time. The last, metric I want to look at is just the liquidations, and you can see, we did have a big liquidation day in the last 24 hours. 891 million in liquidations, and to be honest, considering the move, that cryptos had, especially through alts and Bitcoin. I was expecting it to, get over that $1 billion move that we kind of seen many times in the past. And this is just again showing me that there isn't the same participation in the markets anymore, because a move like we've seen over the last 24 hours during any of these times would have definitely ticked us up over $1 billion. You can see, looking at the top here, we've got 48% on the long side, 51 on the short side. So normally you want to see this a little further apart, maybe like 52, 53 on the short side before you really see that bounce back. But that's it for that data. We're going to hop over now and we're going to look at the charts. So the first thing I want to look at is just the S&P 500. And, it's had a terrible open here today. I think we are down almost to the 20% now, so 17%. Obviously, 20% or more is bear market territory, and that trend line that we're looking at is bang on the 20%. So that's the trend line we've had created off the COVID low. So if we were to go down and test that trend line, we're looking at 20%. And if this is a previous bear market here, which began in December 2021 and basically lasted about a year, 280 days-ish. So this high that we put in back then in 2021 is a key high we want to mark out. So if we do get an overside retest of that and a bounce, and it holds, that would be pretty bullish. And I do think it can happen. But from the current price to there, we're still looking at another 5% drop. So keep that on your radar. A lot of people are calling for a bear market. They're calling for recession, and even the tariffs, this whole move down, there is no real hard evidence that anything has actually happened yet. There's no recession. Tariffs haven't even come into effect yet, and we're seeing a move like this. Now, the markets are quick to react. They're obviously going to price in the worst case scenario first, and that's normally the case. When we enter a recession, we're already going to have marked a low at that point. We're actually probably going to be rallying through the news of stimulus. But if we look, at previous corrections here, in October 2018, we had quite a quick correction. We had this drop, retrace, and then this quite sharp capitulation to mark the low, and that was bang on 20%. But it didn't mark a bear market. From that 20% move, we then rallied out of it. It didn't take that long to put in new highs, roughly about, took about 120 days before we were trading back at those highs, which isn't bad. And then we obviously had the COVID, which is kind of a one-off. But the fear that we are seeing in the markets right now is as bad as it was here. And you've got to remember that, this was a global pandemic where the economy basically shut down for 30 days. And we're in this position we're in right now with the same amount of fear in the market. And we've basically got no news of a recession. There's no guarantee of anything at this point. So, it could be a little bit over-exaggerated, this correction. So bear that in mind. Looking then at the Nasdaq, which has been hit a little bit harder, currently down 26%, had another terrible open. Definitely in bear market territory, but it is a volatile, much more volatile than the S&P 500. And you can see the bear market here. This is what a bear market looks like, where it's just a steady downward bleed with kind of 3 drives down. You've got this drive, retrace, drive, retrace, drive, and then you marked a low with a double bottom, and then you pushed higher. So oftentimes these sharp, fast moves can be retraced and cleared quite quickly. So in this case, 32% move down, took 32 days from the all-time high, and again was trading back at the highs within 2 to 3 months. So currently we are, how many days? All-time high to current is 47 days. So this could go on for another month, and then we could mark a low, and then we could rally. A few key areas. Currently, it's interesting, we took out we did an overside retest right on today. We did an overside retest of the bull market, previous bull market, 2021 high. And we basically swept underneath, and now, since the market opened, it has began to rally. And if we get a daily close above here, and that still holds as support, pretty bullish. So that could be the mark in the low. Everybody's calling for a Black Friday event tomorrow, or Black Monday tomorrow. I don't think they're all going to get that. So that's your stock market. Looking at Bitcoin, similar to the S&P 500, on a much tighter time scale. Basically, S&P 500, you've got the high from the last bull run, and we have our high from March last year, 2024, and they're sitting about the same distance from that high. So I think I said that the S&P 500 was about 5% off, and Bitcoin again about the same, 4% off from the current price. It would be 6.6%. So Bitcoin was holding up really well on the tail end of last week on the news of the tariffs, but as the markets were closed over the weekend, the Bitcoin seemed to have caught up now, and is in basically the similar position to the S&P 500 and Nasdaq. It marked a low today at 77-ish K, 77.96. So it hasn't quite swept the previous low. That's at the 76 area. Has seen a little bounce, but we could be in for some more pain tomorrow if we don't get any good headlines. And areas of interest are obviously the March high, around that 74 mark. We've got the previous resistance from March to August off the highs, and that's obviously a moving target as we trend down. And then you've got an order block and a demand zone. Now we've already tapped into the demand zone at 76k, and we had a nice push out of it, but there's more liquidity there. We could definitely tap into that again, and it lines up pretty well with the macro trend line created off the August low. So if we come down, test this trend line, sweep some liquidity out of the demand zone, maybe even wick under the trend line, close above, you could even wick down to the March high and end up on a daily close above. That'd be pretty bullish. I think if we wicked down, had a nice strong retest off that high, closed the day back above the trend line, structurally that would be pretty bullish. We do have this Elliott wave. Everything's valid for the Elliott wave to be complete, but that doesn't mean it has to be over here. It's still valid if it goes down and tests that high. So again, we're about 6-7% off that high at the minute. And looking at Ethereum next, it's definitely at an area of interest. Ethereum, I was kind of looking at for 1500 Ethereum last month or the month before, but with all the news and still the uncertainty, and we've got 3 days until the actual tariffs come into effect, I think there is a possibility for more downside. So I'm reluctant to actually jump into Ethereum yet. The next area of interest for me would be this 1,350 mark. And that's kind of where I would probably commit for something long-term, a long-term swing on spot. But that is it for me and the market update today. Just make sure you're not over leveraging this week. It's a good week to sit out of the market, in my opinion. On the downside, we've had a huge move down, so taking shorts here is just a little risky, and trying to catch longs, you're just catching a falling knife. I've tried to catch a few myself and got burned, so just stay safe, maybe wait for confirmation, and just see how this week pans out. But until next time, peace out.